Hello, everybody. Welcome to this weekend. Gosh, what a week it has been. Holy banana bread. We got a lot that we can talk about. And we also got whatever you guys want to talk about. So we're going to bring all of that together. Those of you who are new to the live stream, this is just like the videos, except for longer and with a lot less polish. So glad to see you all here. We'll get this show on the road as people are starting to file in. We do have Jordan in the house. And he said, hey there, Candace, great to see you again. Hope you and Jill are well. Absolutely. Everybody's doing fantastic. We got a lot that we can talk about, as I mentioned. We've had everything from CPI data that came out, which, positive results down in the U.S. We've also had we had the midterm elections down in the U.S. In addition to that, we've had the Bank of Canada giving us a whole bunch of warnings about the job situation and how that's going to impact the economy. And we got Nays Garden in the house. Hello, Nays Garden. It is fantastic to see you here. Always good to see old friends of the channel popping in. We've also had a lot of different stuff that happened on the market this week. And of course, one of the big news articles of the week is the whole collapse of, FTX and what that means for cryptocurrency. I know that we're not huge on the cryptocurrency on the channel, but we got to touch on that one as well. So the first thing I want to actually talk about is our good old buddy Amazon. Now, if I can make it through this segment without triggering my Alexa, it will be a miracle. So we're going to try anyway. Amazon has now a new record. They hold this incredible record. They're the first company to lose $1 trillion in market value ever. Nobody's ever done this before, but Amazon has done it. Last year, July in 2021, they were valued at $1.88 trillion. And now they're down to $879 billion. So they have lost $1 trillion. It's hard to wrap your mind around that, but that's insane. And the funny thing is, they still look like they're very busy. I mean, people are still buying a lot of stuff on Amazon, but apparently it's just that they're not as busy as it appears. Last year, they brought in $33 billion. Well, this year things have turned around. They're actually projected right now to lose $3 billion. So that's massive. I mean, that's a swing of 36 billion, which is insane, which probably explains why they lost $1 trillion in market value. Now we got the holidays coming up and you're thinking, okay, the holidays are going to save Amazon. Well, maybe not. Amazon is actually projecting their slowest revenue growth ever in their history for the holidays. So things are pretty tight over at Amazon. And with recessions on the horizon, almost anywhere on the planet, everybody's talking about recessions. People are just not spending as much. And I think they're going to hold on to their money this year. I think we're going to see a lot less. If you remember Canadian Tire used to have this thing where it was like, give like Santa, save like Scrooge. Well, I think we're all this year going to be on that save like Scrooge size because, if a recession is coming, you really don't want to be racking up all kinds of holiday debt. And that makes a lot of sense as far as I'm concerned. So, maybe tighten in those pocketbooks. Maybe find other ways this holiday season to not spend money. There's lots of things you can do with your family that don't cost a lot of money. And that's, I think, the things you want to look at. Instead of buying decorations, make decorations. I remember as a kid, we used to pop popcorn and string it onto cords, and half of it would make it into the cord. The other half would make it into my mouth, but it was still festive and it was still a lot of fun. So there's a lot of cheap ways that you can create some activities, and you can definitely try to cut back on some expenses. And maybe, I'm invested in Amazon. I'd like to see them make money. But I don't want to see you guys go broke by spending spending everything you got just to get some Amazon gifts this year. But yeah, so Amazon's not the only company that had some bad news. We also had Apple having a little bit of bad news. We talked, I think, last week a little bit about their earnings report, how they were down on their iPhone side. Their Macs were actually doing a little bit better, which is great. I mean, I love Apple. All my products are Apple. So I'm a huge Apple fan for sure. But they're having some issues. One of the big things that they've just recently done is they have actually looked to cut their iPhone 14 production by 3 million units. Now, this is not just because of demand, it's also because of some of the supply chain in China. There are still lockdowns going on, and COVID is starting to make a little bit of a resurgence. And we're going to talk about COVID here in just a second. Before we jump onto COVID, I want to actually talk a tiny bit more about Apple. Apple is looking with their stream service. They've got Apple TV. They're actually looking to bring some live sports into that package because a lot of the streaming services are now looking at bundling in some sports things to try to get more of that money, because what's happening here in Canada. We're all canceling Disney Plus, apparently, according to our deputy prime minister up here. I actually had to really laugh at that, but we talked about that last week. That's kind of old news now. Quick hello to ST. Fantastic to see you. Glad to see you're here. So what Apple is looking to do is they've actually signed a 10-year deal, and this deal is worth about $2.5 billion to stream Major League Soccer games on the Apple TV app, and they're going to start doing this next year. If any of you are big soccer watchers, this might be something that you're interested in. I'm particularly not very interested in soccer. I think out of all the sports, it's probably the one where it's like, maybe they might score a goal or a kick in or whatever you call it in a game, or maybe you might get two. So it seems to me to be a pretty slow game. I mean, you just got people running back and forth. But those of you who love soccer, this is your time in the comments to defend it if you really want to. COVID. So at least in Ontario, and I know other parts of Canada are starting to talk about this too, we're looking right now at getting a whole bunch of hospitalizations. And it's not just COVID. It's sort of a mixture of COVID and the flu, a few other respiratory diseases. So the main doctor in Ontario is actually on Monday. It's already been confirmed. He's coming out and he's going to ask people to start wearing masks indoors again. Now, it's not going to be a mandate, so I don't think it'll be mandatory, but you might see places like businesses that'll basically say, yeah, we're doing it for our business, and you'll have no choice. So whatever you do, if you're in Ontario, make sure you start carrying your mask with you just in case you run into situations like that. And if it continues to get worse, and this is the whole thing, is that it's the children's hospital right now that are over capacity because it's the children that are getting sick. So I wouldn't, if they went to mandate it again, I really wouldn't be surprised. That is a possibility. Now, let me ask you guys, do you guys think we should maybe, just to get this surge out of the way, do you guys think we should maybe mandate masks, or are you going to start wearing a mask? So let me know in the comments if that is one of those things that you are thinking about doing, because, it's one of those things that I look at it this way. Here's the funny thing. I hate masks in the summer. They're a pain. They're hot, make you sweat. They're not too much fun. But in the winter, a mask, at least outside, wearing a mask is almost like wearing a scarf, and it keeps you a little bit warm. So that's not so bad. But if you wear glasses, wearing a mask basically means, I can't wear my glasses with a mask because it just steams them up, and it's like you can't see where you're walking, and that's not really a safe way to be traveling around. So, all right, let's move on to that big story about FTX. So, you guys by now, unless you've been living under a rock, have probably heard about all of the issues with FTX. Initially, it started with the international version of FTX, so FTX.com, and it has now moved into the US version. So we're looking at this going out of business. So they're going out of business. They have applied for bankruptcy. We're at a situation where FTX has a cash fall shortage of about $8 billion. And this is not good news, because what happens with these exchanges is they're taking your money in, they're giving you this fantastic interest, but they're lending all of your money out. And when people start saying, hey, I want my money back, if too many of them all say, I want my money back at the same time, then you run into liquidity issues. And that's what's happened, because people have been getting so nervous, especially when FTX.com got in trouble. Everybody on the US version of FTX, they're basically like, yeah, I'm moving my crypto out. I don't want that interest anymore. It's too dangerous. And they ended up, of course, freezing transactions. And now people are trying to get their money back. And a lot of people have lost money. Like if you looked at Bitcoin, and it's funny, if you look at the price of Bitcoin on the 9th of November, it got down into the 15,000s. That's insane. And here's the funny thing. Go back 1 year. It was up around 69,000. So we went from, in just 1 year, we've gone from an all-time high to, I can't call it an all-time low, but a low that we haven't seen since well before 2020. So that's kind of an interesting thing. I'm an under rock liver. Okay. It's actually funny. When I first saw that, Jordan, I saw the word liver and I'm thinking, wait a minute, what's he talking about meat for? But now I understand what you're talking about, Jordan. Some people are, you know what? Some people are like, I know a lot of people who don't pay any attention to the news because it's absolutely too depressing. And that is absolutely okay. But okay, so back to the FTX. Now, one of the things I've been talking about with exchanges is that if you're holding crypto, don't hold it on an exchange. Don't get tempted in by these interest rates. If you are bullish on Bitcoin and you want to hold it long term, buy it on your exchange and move it to your hardware wallet. Don't become a statistic, one of these people who loses all of their Bitcoin or a good chunk of their Bitcoin. Because one of the interesting things is, even through bankruptcy, if there's money left over to be divvied out, it's going to be divvied out to accredited investors first, which is probably not most of you guys. So there's a good chance that you could end up losing your Bitcoin. Now, here's the interesting thing. This is just the beginning. And I said this with Celsius. This is kind of a sign that companies who are doing those interest rates are going to all be in trouble. Now, if you think about it, because of FTX, the next one probably will be BlockFi. I see BlockFi coming up next. And that, BlockFi kind of scared me even before there were any issues out there. And what scared me about BlockFi, when I first started buying crypto, I did go into BlockFi. I thought it was great, fantastic, some interest on my crypto. But what scared me at that point was the fact that it took so long to move it off of BlockFi if I wanted to move it into my hardware wallet. And I'm like, okay, if it's going to take me 3 days to move a transaction, I cannot afford to have that kind of non-liquidity. So I left BlockFi for that reason. Now, I imagine BlockFi is probably going to be next. So you want to watch out if you're on BlockFi. And I think last I heard, they were pausing their withdrawals. So if they unpause their withdrawals and you've got stuff on BlockFi, get it off BlockFi. Get it into a hardware wallet, because you just want to. My watch just told me it was out of power, which means it's not going to talk while we're having the show, which is fantastic. Yeah, definitely get it out now. Riley's Wendy says Wealthsimple has crypto. Is that bad? No. I'll tell you why Wealthsimple is not bad. Wealthsimple is not loaning out any crypto that you have invested on their platform. That's where the trouble is. It's very much like if you understand what fractional reserve banking is. So, for example, when you go to a bank and you give them $1,000, that bank only has to hold on to 10% of that. So they would hold on to $100. They would take that other $900 and they would then loan that out to other people. And then, interestingly enough, if somebody had that $900 and they took it to another bank, that bank only would have to hold 10% of that. So $90, and then so that would leave $810 that they would then loan out. So money gets inflated massively because of the fractional reserve banking system. Well, that's what these exchanges have kind of become. They become like a fractional reserve banking, but they don't have the banking. They don't have the backing of the banking. They don't have the insurance. And then anytime people want their money back, and if enough people, like a bank rush, but an exchange rush to one of these guys, they don't have that money. And that's what causes the issue. All of a sudden, it will cause the whole company to start collapsing in on itself. And that is what's happened to, well, it happened to Celsius, it's happened to FTX, it's probably going to happen to BlockFi. So that's just one of those things to keep in mind. And here's, as Scott says, get your money off the exchanges. Yeah, absolutely. But going back to your question, Ryloves 1D, Wealthsimple, like I said, they're not lending it out. So because of that, it is much safer there than one of these other exchanges, but it's not completely safe. If something were to happen to Wealthsimple, and trust me, I don't think I've got a lot of money on Wealthsimple, so I'm not worried about them, and they've also got some really good backing. But keep in mind that it's still, if you've got crypto, the safest place for it is going to be on your hardware wallet. And if you're worried about staking rewards, a lot of different coins you can now stake from your hardware wallet as well. So you can still get some of the staking interest. And when I say, and I just want to point this out, when I'm talking about the interest that these exchanges are giving, we're not talking about the staking interest. If you're getting staking rewards and you're on an exchange, but that exchange is not giving any extra money or any extra percentage for just being there, they're probably going to be, at least, I don't want to say safe, I want to say safer than the others. So that's kind of one of those neat little things. And Dimitri is in the house. Hello, Dimitri. Always good to see Mountain of Inspiration in the house. Dimitri has a fantastic channel if you guys want to check that out. He gives a lot of historical context to some great stories to give you some motivational points. It's a fantastic, fantastic channel. And he, of course, says, hello, friends and family in the chat. And then, of course, my good buddy Scott over at Create, Save, Invest. That's the name of his channel as well. He's talking a little bit more. So Wealthsimple uses Gemini and Coinbase, I believe, to custody their crypto. Yeah, absolutely. I'm okay with Wealthsimple. And Wealthsimple is that type of company that I have very little worry about. But keep in mind, it still makes sense. You'll hear that exchange that says, not my keys, not my crypto. And it is kind of true. It makes sense to use a hardware wallet, even on something you think is safe, because keep in mind, at one point, people thought Celsius was safe. And even when I was like, I was talking to some people who were like, oh, you should move all your stuff to Celsius. And I'm like, no, I don't want to. I can't see what they're doing as being sustainable, but I got some kickback saying, oh no, they're perfectly safe. Don't worry. You're fine. But I wasn't fine. I didn't put my stuff on it. I kept my stuff in a hardware wallet. And as a result, I have lost exactly 0 crypto to any of these collapses. And now some of you may have lost money, and I tell you, I feel bad for you, but don't let it happen again. Get your crypto off of exchanges, put them on hardware wallets. You will be absolutely safe there. All right, and Ryloves 1D. I only have a TFSA on Wealthsimple. Yeah, absolutely. That's where my TFSA is on Wealthsimple. And I also have my RRSP there. So I do have, those are 2 fantastic products on Wealthsimple. If you want to get into crypto, they do have the crypto there as well. But like I said, if you're brand new, and here's the thing, if you're new to crypto and you're like maybe just dabbling and playing with a small amount of coins, like it's not a big investment, you got $100 in crypto, well, you probably don't need to rush out right away and buy a hardware wallet. If you've got it on something like Wealthsimple, you're fine. But when you start to look at bigger investments, like if you went out and bought an entire Bitcoin, well, you want to move that off the exchange. It doesn't matter how safe that exchange seems to be, then you want to definitely have it on a hardware wallet. To me, it always comes down to asking this question. Is this investment big enough that if I lost it, it would really hurt? If the answer is yes, then especially with crypto, that should be on a hardware wallet. It just sort of boils down to that completely. Now, I was mentioning Scott once again. So me and Scott, we still haven't got our wires together yet, but we are still looking to do that collaboration over on his. We're just going to talk a little bit about YouTube, how YouTube works. If any of you guys are interested in starting a YouTube channel, or you just want to get that behind the scenes We're going to do that. I'm actually looking really forward to that. Scott should email me soon so that we can get that rolling, because I'd love to get that done definitely before the holidays. So that's kind of cool. All right. So that was a little bit on the FTX. And I guess we kind of went on a little bit of a rampage there with it. A rampage. I was going to say a rant, not really a rampage. It's not like, it's not like they had to call in the Air Force because we were destroying buildings. All right. So CPI, let's talk a little bit about the CPI in the US. So the CPI did come out this week. It came in better than expected. So inflation itself, so regular CPI, it dropped from 8.2% to 7.7%, which was great. And the interesting thing is that this is a good indication that when it comes to a rate hike in December on the US side, instead of a 75, most people are now thinking it's going to be a 50. So that's where this rate hike has helped. Now, that's regular CPI. Now, a lot of people prefer to use core CPI, because core CPI strips the gasoline and the food, the most volatile, out of the equation. And with core CPI, their core CPI did drop as well from 6.6 to 6.3. So this was fantastic. As a result of the CPI, we had absolutely beautiful market end to the week. It was fantastic. Here's the interesting thing. I'll tell you a tiny little story here. So the night before the CPI came out, I was thinking it was going to be as expected. I didn't realize it was going to be a little bit better than I thought. And I was also looking, I'd been playing with day trading. I'd been playing Manulife Financial. So I decided, okay, you know what? I bought in. I actually bought 3,000 shares of Manulife Financial on Tuesday night, just before the market closed. And I'll tell you, it was a restless night because that was a gamble. It was definitely a gamble. I was pretty sure that because two things were happening. Manulife Financial was also having an earnings report. Now, if the earnings report was really bad, and there was a chance of it being bad because they had lost a lot of money because of Hurricane Fiona. Well, I heard the earnings report first in the morning, and it wasn't great. It was kind of middle of the road, but they were below expected. So I was like, okay, so I might take a hit for that. But then the CPI data came out, and that overpowered it. So in that one move, about 5 minutes after the market opened, I sold 3,000 shares of Manulife for a total profit of $1,100. So it was a really, really good thing. I managed to hit in and snag a big chunk of change just by doing that. So that was just fantastic. You don't get many days like that where you get to make a trade that massive, but it was a gamble. It was absolutely a gamble. If that CPI had turned out to go the opposite direction, then I could have been really, I could have lost. I could have lost $1,000, for example. But luckily, it turned out pretty good. All right, and we've got Sociable. Where to start the road of financial independence? I am 31, would like to early retire around 40 or 41. Okay, that's going to be a tough job to pull off. Not in 10 years. What you have to kind of do is you're in a situation here too, and where you're starting right now, you're actually starting at a good time. You may be looking at the fact that we're still technically in a bear market. Things are down, but when things are down, that's a good time to start your DCAing, so dollar cost averaging into your assets, because those are going to have bigger returns when they turn around. You're getting, for the dividend ones, you're getting bigger yields. For the growth ones, you're going to get some bigger growth on the other side of this. Now, I do have a video on FIRE. So FIRE stands for Financial Independence Retire Early. So if you're just on the channel, Sociable, and you look that up, you can pull that up. It gives you a general idea of how to do it. But I will be very honest, to do it in 10 years would take a lot of luck, and this is what I don't have this information, but if you have a lot of money that you can contribute every month to your investments, so you have a larger inflow, you can definitely do that faster. So what you're going to be looking at is you want, when you hit that point of financial independence, usually what you're looking for is a good amount of passive income that you can live off of, or well, here's the way I would do it. The way I would do it is initially, especially where you're young, I would be looking at total return. Because your growth stocks, yeah, you're going to get some good ones, but total return is looking at the growth and factoring in the dividends. So it's not going to be your high dividend stocks that get you there, but it's going to be your stocks that have a good amount of growth and a reasonable amount of dividends, so that when you add them together, you actually get a higher return. And that way there, you can sort of build things a little bit faster. Now, another thing too is, and don't do do not do day trading if unless it's something that you're really, really good at, because most people will lose at it. I'm good at it, but I have bad weeks. I've had weeks that have been in the hole. So that does happen. So you have to be you have to almost have a specific type of mindset for the day trading. And I'm going to do some more videos on day trading, and we're getting closer to those videos. I got to start working on them. I've got them on my whiteboard for things that I'm planning out already. So that's going to be coming. But back to your question, your big thing is to be consistent. Reinvest everything that's coming back to your account. So all your dividends, you want to be reinvesting them. There's like it's like a drip. Now you won't with Wealthsimple, you can't actually enter it as a drip, but just manually do it. I like to manually do drips anyway. And a drip is just dividend reinvestment. And I'll tell you why I like to do it manually is that if I get a dividend back and I see another great dividend stock that is, well, let's say, for example, I'm thinking, because where I look at total return, if I get dividends back right now, I may look over, for example, at Bank of Nova Scotia. They normally have about, a 3 to 4% yield right now. Because of the bear market and their price being low, their yield is closer to 6%. So it would make sense for me, if the company that's giving me dividends, if they are not as good of a deal as what, say, Bank of Nova Scotia or somebody else is, I will switch. I'll take the dividends from one and I'll throw it on the other in the reinvestment. And a lot of times too, with something like Wealthsimple, and this is what I like about Wealthsimple, you can also invest fractionally in most of the most popular stocks. So, if you have $10 in dividends, you could still throw that onto Bank of Nova Scotia. You won't get a full share, you'll get a fraction, but that all adds up and it all snowballs. That's kind of what you're trying to do, is you're trying to create a massive snowball of compounding dividends and returns to try to get you to that road faster. So I'll just tell you right now, once again, I've already said this, 41, it'll be tough, but here's the thing. Here's the beautiful thing. If you put everything into it between 31 and 41, and even if you don't get to the point that you can retire, you'll be a lot closer to that point, and you will have a nice investment sitting there, that you can still build on. So it might be a situation where, heck, maybe if you're putting in $5,000 a month or something, because I don't know what you do, you may get there much faster, or you may be close at 41. I don't know. I don't have enough data to really say that. But we will, all right, I'll get to your second comment here in a second. I just want to quickly say hi to Ian, Mac Photography. Definitely. All right. Now, let me see here. I work for an investment bank anyways. I am restricted not to do day trading. Good. That lot less stress. Thanks for the advice, though. It would be Sophie's choice to buy home or fire. Yeah. It's one of those things. Right now, I think home prices are going to come down. Right now, the problem is because of the interest rates, buying a home, it's still a good investment, but you're paying a lot more interest rates. So I think it's not the ideal time to be buying a home at the moment, but definitely build up the fire. So, keep throwing wood on that fire, get it going, start looking. And like I said, check out that video. Also, there is a Facebook group for this channel where you can, you don't have to wait for Sunday to ask a question. You can definitely hit me up on the Facebook group. There is a link below for that. join it. We'll throw you in. Ask any questions you want over there. I will get to them. A lot of times too, if there's something that you're interested in that you want me to do a video on, definitely throw that over there. You can also ask in here, though it may get lost depending on how busy we are. One thing I will say, if you want to utilize Super Chat, definitely do that. It'll take a high priority. I've been trying to figure out how we can do Super Chat. So I'm thinking that when it comes to requests, if you Super Chat a request, I'm going to move it to the top of the pile. That's just how I'm going to start doing those. So just keep that in mind. If there is a company you want me to do and you want me to do it sooner than later, throw it up as a Super Chat or a Super Thanks on one of my videos, and it'll knock you up to the top of the pile. All right. So that was CPI. Oh, a couple other little things on CPI. Everybody is feeling really good right now because it looks like inflation is starting to back off in the US. You got to keep in mind, though, sometimes inflation does do that. Sometimes it will pull back and then boom ahead again. So we don't know if we are really over that, over the hump, if it really is working. I'm hoping it is, but we need a couple of months of CPIs looking good to start feeling a little bit better about it. So, just keep that in mind when it comes to CPI. We're not out of the woods yet. And the same thing with Canada as well. But I think that we're managing things a little bit better up here. But nonetheless, we're probably still going into a recession. But here's the beautiful thing about a recession. Usually when you're in the middle of the recession, that's usually when you flip from a bear market into a bull market. And that bull market is where you start to make some serious returns. And it will also power you out of the recession. So that is a good thing about a recession if one does, come along, and we probably are. Everybody seems to think we're getting one. So I would say I'm about 99% sure that we're going to see one. So that's just kind of where I stand. All right. Some interesting company news I heard. IKEA, of all things, I was looking through some of the news and I noticed a little article on IKEA. So they've actually started a $10 million fund. And this fund is basically to help some of their cash-strapped employees, which I thought was fantastic. It's like, okay, that's kind of cool. And in addition to their fund to help people who really need it within the company, they're also increasing all of their employee discounts. So that way if any of their employees need furniture or things like that, they're going to get a bigger discount. And this is the thing, in this type of an environment where, everybody's fighting inflation, this is not a bad thing. Thumbs up to IKEA on that. All right. One other news article that I did really want to bring up was a little bit on bankruptcy. Now, the Superintendent of Bankruptcy Canada released a report this week. And what they're saying is that right now, bankruptcy in Canada is on the rise. And that should come as no surprise, I don't think. So Canadian consumer insolvencies, they increased by 22.5% last quarter compared to the previous year. And business insolvencies have also shot up 37% in the last year. That's a lot. What that actually all boils down to is 25,809 filings for bankruptcy. That's actually up 2.3% over the last couple of months. So if you go 3 months back, we're up. And we kind of knew that this was coming. There's a lot of businesses that are really, really struggling. And it's tough out there. It's really, really, really tough. And we're going to see more of this. And it's not going to be good because, it's going to, where we have a surplus of jobs, at least people have places to go if they want to get some work. And it might actually make our friends over at the Bank of Canada a little bit happier because they do want to see those job numbers come down. I'd rather see them come down, by people, for people who need jobs, but I don't like to see people lose their livelihoods, their businesses, things like that to fall just to, to appease some of their numbers. Now, one of the things that the Bank of Canada has been going on about is because we are still getting very, very strong job numbers, we're getting to that point where you're almost starting to see the whole wage spiral where we have a wage inflation spiral that gets out of control. So basically, people have to be paid more because there's not enough people, because otherwise, you can't keep them. And because they have to be paid more, it causes more money and more demand. Inflation starts going up. And then all of a sudden workers are like, oh, we need more money. And it sort of goes in that big circle. So you end up getting to the point where wages and prices start to get a little bit out of control. And that's what we're trying to avoid. And that's what the Bank of Canada has been worried about. So we need to sort of watch this. It'll be very interesting to see what's happening. Of course, if you go in the States, there's a few people down in the States who actually think we're heading towards deflation. I don't fully describe to that yet, but it'll be interesting to see how this is all going to work out. Because if you think about it, back after World War I, we had a war. We also had a pandemic back then as well. And we had out of control inflation, but then that did eventually actually run into a deflationary period that then powered the start of the 20s, which is when people had insane amounts of money and money was just flowing like crazy. But we paid for that because that led us into a depression. So I would rather not have that happen. So that'll be kind of interesting. All right. So that's the news for this week that I brought with me today. I do have another interesting little thing here. We'll just do this in a second. So here's a really interesting thing. So we always are talking about, who are the richest people out there? Who's making the most money? I ran into an article from Forbes, actually, and it was a list of dead people who are making the most money. So I have come up, I brought with me the top 7 famous dead people in the last year and how much they made. So that's kind of interesting. So before I reveal who the 7 are, why don't you guys throw a couple of names into the chat and see if you guys can figure out who famous dead people made the most money in the last year. And hello, Jeremy. It is always fantastic to see you. I hope you're having a wonderful day. All right. Now, I'll get you guys. I'm going to start you off. I will give you number 7. So number 7 was Leonard Cohen. So Leonard Cohen in the last year made $55 million, even though he is dead. Jordan guessed Robin Williams. No, Robin Williams did not make the list. Oh, look at this. Yes, Michael Jackson came in at number 6. That was perfect. I'm glad you chose 6 because it's like we're going up the right way. Michael Jackson last year made $75 million. Freddie Mercury did not make the list, which is interesting. There are some, I will tell you, of the top 5 that we have left, 3 of them are musicians. So there are 3 musicians, 1 sports person, and a writer, if that gives you guys a little bit of a hint. And I'll give you a couple of seconds and then I'll drop number 5 if nobody's guessed number 5 yet. So, but yeah, you think Freddie Mercury would be high on that list because he makes a lot of money. And Prince is a great choice too, but it's not Prince, Ford. Tough. Sociable. You are freaking on fire. Yes, Kobe Bryant is at number 2. Kobe Bryant last year made $400 million. And a lot of it is he has a deal with Coke. And that's all going on. Jordan says John Lennon, not John Lennon. And my Scratch Lifestyle says I'm a new subscriber. Awesome. Always love new subscribers. Welcome to the community. If you guys haven't yet hit like, by the way, on this, just hit that like button really quickly. It really does help people get a chance to see what's going on. Helps people like No Scratch Lifestyle find the stream as it's going on. All right, so there was John Lennon. All right, I'll give you number 5. Number 5 was James Brown. So James Brown made $100 million. All right, number 4, holy banana bread. This is awesome. Number 4 is Elvis. I was just about to say Elvis, and No Scratch, you came in and you beat me to the punch. That was perfect timing. I love that. Elvis made $110 million. So we got 2 people left. We got a singer at number 3 and a writer at number 1. I'll give you a hint about the singer. One of this singer's songs was actually performed on the International Space Station. So there we go. That's a massive hint. Massive, massive hint. So you guys should know exactly who that is. Somebody who died not that long ago. One of their songs on the space station, performed by a Canadian astronaut. The name Major Tom mean anything? I'm throwing a lot of hints out there. There we go. Mr. Red Taco has it. Yes, David Bowie. David Bowie made $250 million. All right, we got one person left. They're at number one. They made $500 million, and they are a writer. So we got a writer, not Tom Jones. Give you a hint. This writer is making a lot of money because, well, a certain streaming service bought the rights to his big trilogy, and they're making a show about it. Something about rings and power. So I'm pretty sure I've given you guys enough. You guys should know who that is. Rings of Power. Just think about that for a second. There might be a big eye focusing on you right now. Not my eye, but an eye owned by somebody named Sauron. Hopefully, unless you guys are just not into geeky stuff, then maybe that's kind of it. But yeah, well, technically, Major Tom there shows up in other songs as well. I think there's a few songs that have sort of referenced Major Tom as well. Harry Potter? No, not the Harry Potter. Right? She's still alive, by the way. All right. I can't believe nobody's gotten this. Jay, there we go. Jeremy got it. Thank you, Jeremy. My faith in you guys is restored. Jeremy has brought you all back. So yeah, J.R.R. Tolkien made $500 million, but a lot of it was that deal with Amazon, because they made that the Rings of Power series, and they had to pay a lot of money to get their hands on that. So yeah, J.R.R. Tolkien comes in at number one. So that was kind of fantastic. I got that really cool. Mr. Red Taco says, never would have gotten that in my life. I would have given more. I would have given more hints, but yeah, that's one of those things. And a lot of people know about the Lord of the Rings and the Hobbit and all of that stuff, but they may not know who exactly the author was. I mean, if you talk to a young person, you're like, who wrote the Lord of the Rings? And they'll probably tell you it was Peter Jackson. Yeah, because he directed the movies. So that's just one of those little things. So I thought that was kind of neat. It's amazing how much some dead people make. Somebody like Elvis. Like, I think Elvis has been probably on this list for like forever. I mean, I know as a kid, Elvis was dead, and my mom every year we'd still buy her like an Elvis record or something. So yeah, I think Elvis has been making a crap load of money. So that one was not a surprise. I was no, George Lucas is still alive, Mr. Red Taco. He may have sold Star Wars, but yeah, he's still alive. He's still alive. Yeah, that's kind of one of those interesting things. I almost should have found out who the people alive in the entertainment business, sports and entertainment, who are making the most money. I didn't look that up. I should have, because now that I'm thinking about it, I kind of want to know who those people are, but I don't know. So that's kind of a cool thing. So what are you guys thinking about this week? So we had a really good ending too. Let's see. Oh, I missed the actual question. I was only guessing. Oh, okay. Oh, that makes sense. That's why you were guessing living people. Perfect. That makes a lot of sense. Okay, so we had a nice end to the market last week. What do you guys think is going to happen this week? Are you guys expecting a green market? Are you expecting it to go flat? Are you expecting things to go back to the red? Let's see here. Apart from Algonquin Power and Utilities. Yeah. Algonquin did not have a very good earnings report. But Algonquin, they've been struggling for a little bit. Like I know a lot of people love Algonquin because they have a fantastic dividend, and they're also a dividend aristocrat. So on paper, you almost think Algonquin should be doing better than they have been, but they have really been struggling. And to me, this is what worries me. When you've got an energy company struggling when almost every other energy company out there is going to be is basically, making record profits and doing really, really well. That scares me a little bit with Algonquin. I know a lot of you guys probably hold Algonquin. Um, I really should see Algonquin is one of those ones I'm thinking I should do a deep dive on it. Um, but I have a feeling it's not going to be a nice deep dive. And every so often, I'm like, oh, I keep doing these deep dives, and I'm being mean to this company, I'm being mean to that company. I need a company I need a good one just to break up the meanness sometimes. But it's one of those things. Like I've had companies where I've actually done a deep dive, and I thought it was going to be good, and then when I actually got into some of the deeper data, I was just like, oh my God, this is not what I was expecting. Right. And Scott's saying it'll be a good day tomorrow to pick up some BTCY. So BTCY, that's the Purpose High Yield Bitcoin ETF. Now for those of you not familiar with what they do, BTCY, they're like a spot Bitcoin. Well, they are a spot Bitcoin BT ETF, but they also use covered calls so that they can enhance the dividends, and they have pretty darn big dividends. But I will warn you, if their covered calls don't go the right way, and sometimes they don't because Bitcoin is very volatile that way, they do sometimes cut their dividend a little bit. So their dividend, I don't want to say it's exactly at whichever yield percentage you see it at. It does shift quite a bit, but it usually stays much higher than most things. So it's not a bad thing. And Jeremy, I think you've hit this right on the nose. Stagnation, incoherence of the market, from my opinion, and too many acquisitions with a dilution financing. Yeah, AQN, that's one of the big things is they have gone stagnant. It's one of these things. As a company, it's fantastic to expand, but when you expand, there's a lot of costs. You do get dilution because you're paying out different shares. Take, for example, CP, so Canadian Pacific. They're still in the process. They're finalizing that process of purchasing Kansas City Southern. So Kansas City Southern is another railroad railroad system in the U.S. So once that is complete, and I think there's only one regulatory board left to approve it. So that's how close we are, and that we should get that hopefully finalized early in 2023. That will make CP, so Canadian Pacific, the only railroad in North America that has access to Canada, the US, and Mexico. So that's going to be big for them. But here's the thing. That is going to hurt a little bit of their numbers initially. And we've seen a little bit of this already. And that's the thing. As long as they let that settle, they sort of, I don't want to say back build, but they give their system a chance to sort of settle and let a little bit of an equilibrium to develop after that purchase. Then they're okay to start looking if there's something else they want to do. But that's the whole thing. AQN, so they have not done that. They don't give themselves time to settle. They start moving into acquisitions too fast, and that can be a problem. And Ethi, yes, Ethi is the Ethereum version of that Purpose ETF. So it's a Purpose Ethereum high yield ETF, same exact idea. Their yield is a little bit higher than the BTCY, but once again, it does move. So a lot of times, and this is what you have to be prepared for, because I know if you guys are like me, I will create a spreadsheet and I'll say, okay, my yield, this is what my yield should be. This is what they're paying. And I won't even calculate my calculations on the yield because the yield's always moving with the share price. But if they're paying, let's say, 14 cents a share, I'll put my calculation in. But in a case with something like these two ETFs, let's say and I don't know exactly what it is per share. I'm just randomly throwing a number out there. If it's 14 cents and their cover calls go bad, they may declare the next one at 12 cents. Then maybe The following one, everything's back to normal. They might be back at 14 cents, or they might even go a little bit lower, depending on how bad things get. Right now, it's a situation where, because when you get movement solely in one direction with an asset, so for example, with Bitcoin and Ethereum, if it's almost all going down, it makes it a lot harder for covered calls, because are you going to take out a contract that's predicting the price is going down when you think, and everybody kind of gets the idea that the price is kind of going down. So, but when it's moving up and down, it gets a lot easier to start pulling in a covered call scenario into that. So that way there you can pull out, well, you can actually make a lot more money, and then you can pay that higher dividend out. So, keep that in mind with those. And Scott's an expert on it because he's had BTC now for a while. So he's probably seen that change that sort of goes on with that price. But it is still a good, buy. All right. And if you want to share your thoughts, what do you think of Intel? All right. I think right now, honestly, I think chip manufacturing right now in the US, I think it's in an interesting spot, because where the U.S. wants to move away from China imports and is basically incentivizing chip makers to make their own chips on American soil or North American soil. I think that's going to really work in the favor of, Intel, AMD, a lot of different chip manufacturers. So I think Intel is one of these companies. I think they're good. I would consider them blue chip. I would consider them a good long-term investment. It'll be very interesting to see. Like I said, it'll be interesting to see how things are going to go. Like right now, tech is kind of in the hole, but they are going to recover. And that's the thing. When you take some of your bigger companies, so Intel, Microsoft, Google, these are companies that are not going to be going under. And these are companies I think right now you're getting them at bargain prices. So that's not a bad thing at all. So yeah, I am bullish on Intel, and here's the thing, I really want to start doing a few deep dives on some American companies too, some of the American blue chippers. So maybe I'll have to do Intel on that, because I really would like to dive a little bit deeper into Intel. And let's see, I noticed why energy companies have a high dividend payout ratio. Here's the interesting thing right now with oil, gas, and the whole energy sector. A lot of them do have a higher dividend payout, for the simple reason that there's a lot more cash moving. It's a very much a cash flow business. So you've got a lot of cash, you got a lot of oil. And when oil prices are high, so when gas starts going up, they start pulling in profits hand over fist. So if you take Tourmaline, for example, they ended up doing an extra special dividend because they had so much excess money. And so there's a lot of money out there. And yeah, Alwyn does say not all energy have high div. Yeah, not all of them do. You take, for example, you're not getting with the high div, and you got to also define high divs. Like some people are like, if it's not 10%, I don't want it. You're not going to get 10% on most oil stocks, but a lot of the companies, so companies like Fortis, Enbridge, they do have some higher divs, and there's also some other options. So, for example, with Enbridge, there's a split core called ENS, and ENS basically they're just using covered calls on Enbridge so that you can get more money, and that's a very popular one because you're enhancing that dividend on the oil sector by going with that split core. So, and that's fantastic. I hold some of the ENS too, but I also hold things like Fortis, because Fortis is one of the things I like about a company like Fortis is I know that there's going to be half decent growth, and maybe their dividend yield, and I can't remember exactly what it is. I think it's in the fours, somewhere 4% to somewhere between 4 and 5%. I'm not sure exactly where, but between that and the growth that I expect over long term, that to me is a total return stock, and it's also a stock that's very stable. It's a stock that I know what their infrastructure is like. I know they're building into renewables. They have an insanely good record of dividend payings. Like right now, they're at 49 years of increasing their dividend year after year. So that makes them a dividend aristocrat, but they will be a dividend king in about a year. in about a year, they'll be Canada's second dividend king, the first one being Canadian Utilities. So they're a very solid sector. A lot of, you can get some pretty good moderate dividends, and you can also get some half decent returns in there. And when oil is booming, and I feel like right now, we're in a situation where I think now that the midterms are over, we're not going to see the US throwing oil out of their strategic reserves like crazy. That is going to pump oil back up. So oil, very bullish on it. I think once, and I kind of said before that it would probably take about a month after the midterms for you to really start to see things picking up on oil. It could be sooner. It's really going to be really interesting to watch that sector. But oil is one of these sectors that is going to continue to go up. It's going to continue to always be pulling returns. And the beautiful thing about oil is even if you get into it and everything tanks, you just got to sit tight and hold on. You're going back up again. There's no way around it. That's just the way oil works. So, that does make a lot of sense. Right, and we already got to that, and we got the freaking Oracle in the house. Welcome, Oracle. Always good to see Ken in the house. So yeah, that's a little bit about just the oil and the oil sector. So I'm sort of pulling that all together. I know another thing too I wanted to talk about quickly. Channel memberships. So one of the things I have started doing is I have started dropping a little bit about some of the day trading stuff I'm doing onto the channel for channel members. And I'm also, like yesterday, I have my, I did my thumbnail for tomorrow's video. So I actually dropped that down and told them what stocks are going to be in the video for tomorrow. I'm also looking to do a behind the scenes video. I haven't done it yet. I was going to do it this week. I just got really tied up. So that's one of those little things for little extra bonuses for the channel membership folks. Now, when you guys, and here, let me just put this out there. When you guys first log in, if you get that little message at the bottom of the chat that says allow gifting of memberships, you always want to turn that on, because what that means is if some big high roller comes along and it's like, oh, I just want to support the channel, I'm going to gift a bunch of memberships, kind of like what they do on Twitch. It means that you'll be eligible to receive one if somebody decides to do that. So I did that myself. Anytime I go into anybody's chat or anybody's live stream, I turn that on because, hey, you usually always get some extra value from those type of things. So just going to put that out there. Also, make sure as well, I know I've mentioned this before, if you haven't hit that like button, just slam that, turn everything blue, and that would be kind of fantastic. So we're coming up on the end here. If you guys got any questions, this is the thing. Here's the thing. I always say, save your questions for the end, because then you can sort of extend the stream, because it's really easy to send me off on a tangent. And that's, that's cool, because I don't mind doing that. Like, I'm the type, you send me off on a tangent. It's not like I have an alarm here saying, oh, get off. You're hitting the hour mark. I plan for an hour, but if we get good conversation going and we got a tangent going, I'll go longer. I'm okay with that. Yeah, so I think that's that. Content-wise, that's all I really had. I'll give you guys an idea of what's going on this week, though. On the channel tomorrow, trains. Yeah, we're going back to trains again, which is actually funny. I told Jill we're going back to trains, and she was like, she compared me to Sheldon Cooper. That wasn't fun. But we're going to look at five of the biggest train companies in North America. So obviously, you're going to see CN and CP, and you're going to see some American companies there. And we'll take a look and see, are Canada's railroads doing a lot better than the US's? You'll find out about that tomorrow. And we got a deep dive coming on Thursday, and I don't know who it is. I'm sort of trying to glance over there to see if I can see who it is. But yeah, we'll have a deep dive coming on Thursday. And you know what? Here's one of those funny things. There's a part of me that just wants to do the Intel, that wants to do it. So maybe it will be Intel. I'm not guaranteeing it, but I kind of really want to do that. We'll be back in again on Saturday. I think this Saturday, do I have a video this Saturday or not? I don't have videos every Saturday. Most Saturdays I do. I think this Saturday, yes, I think there will be a video for sure. And it may actually be a day trading video. It may be that first, well, it's not technically we did, are you ready for day trading type video. So we'll probably, this next one's going to be more of just a basics. It's not going to get you, it's not going to be the video that you'll watch and then you'll be going out and making $1 million off of day trading. But it'll give you a little bit of how to be prepared, the environment, some of the basics. Because one of the things too is if you are interested in, I really need some coffee. If you are interested in day trading, one of the big key things to understand is you want to really look at a little bit of technical analysis, at least the basics. You want to be able to understand highs, lows, resistances, because those are going to be very important. Because what ends up happening here, and well, you know what? I'm going to share something with you guys. Give me a second. I got to pull it up because I had not planned this, so I don't have it ready, but I just need to get to, here we are. Going to pull this up. I'm going to show this to you guys because I think this is really, really cool. And we're going to attempt, I need to get my thing back. I'm going to attempt to share this. This is the new system, so I have not tried sharing screens on here yet. So just give me a second here. Where is that? No, that's the stop cam. Oh, present. Okay. Okay, let's see here. Share screen. Screen 1 or screen 2? I think it's screen 2. Let's do that. Oh, are you serious? Says Chrome has lost permission to capture your screen. All right. You know what? We won't do it today, but I will show this to you guys next time because the only reason is for Chrome to be able to do this, because this is a new system, it requires a restart when I set it up and give it all of these permissions. And that's the only reason. Darn it. I really wanted to show you guys that because that would have been kind of cool. Or wait a minute. Do you know what? I'm really smart. So let's try something here. Give me a second. I'm going to show you guys this because I'm like, I set the expectation. So I'm just going to pull this in here. All right. All righty. And just give me 1 second. I'm going to get into my, all right. So this here we go. I'm taking a picture. Or I'm trying to take a picture. Come on. Give me a second. I'll see if it actually came up. Yeah, I know I could do that, but it's one of those situations where every time I try to do it, it's an absolute pain in the butt. Come on, my iPad. You should be able to take a simple picture. Oh. It helps if I hit the right button. All right, give me a second. I'm going to pull this up here on the iPad. All right, see if I can. Let's see if you guys can see this. All right. I know you can't see it very well, but basically by putting these shapes in here, that kind of green one there, yeah, this looks absolutely terrible, but that was the movement of MFC. And by pulling all of these shapes and patterns into my trading view, I was able to predict where it was going to go. And so what I was basically doing is every 30 minutes, it would form a candle and it would be moving up and down the candle, just pretty much the whole 30 minutes. So I was buying at the bottom of the candle, selling at the top. And then new candle would start and I'd wait till I see where the candle is going to be moving, buying at the bottom, selling at the top. That was kind of the whole system I was using with MFC. because they've just been on a tear ever since, that big sale that I made earlier. Now I'm expecting a correction for them because they have been tearing for they've been pumping pretty much for almost 3 days. So it'll be, now they did have a big drop before that, but I'm expecting one probably Monday or Tuesday. So Monday, any playing I do on MFC, I'm going to have extra caution on it just because I know that price is moving up and down. And I also know that we're due to have a big drop and then form a new pattern. But these will be the different things that I get set up. And I'm going to fix the sharing screen thing for next week because I want to be able to do that. Absolutely, because I really, really wanted to give you guys a more clear picture of that. So we'll do that next week. I'll bring that in. And I'm going to look at getting that first day trading video out for Saturday. So I'm committing to that right now. And that way there, because I know a few people are really interested. And those of you who are not interested in it, and here's the thing too, though. Some of the stuff I'm going to be showing you guys in this video and some of the technical analysis stuff that comes with day trading, even if you're not a day trader, some of these skills are very applicable to investing overall. And they can be applicable, learning how to speak today, they can be applicable to not just day trading, but also to swing trading and even some long-term trading. Because a lot of times it's more or less what you're doing day trading. It's like long-term trading, but you're doing it really fast in a smaller pattern. A lot of times you may be pulling out with long-term trading, for example, when I'm looking at doing longer swings, or usually if it's just a straight up investment, I'm not worried about any TA at all because I'm just going to DCA into something that if I'm planning to hold it for 10 years, I'm going to DCA. That's the best way to go. That's the way to make the most money, to be honest. But if I'm doing something where I'm swing trading or I'm buying something that I'm not planning to keep for a long time, or sometimes I have been known to purchase an asset that my TAs told me is going to get it's going to go up for the next little bit. Sometimes I'll do it just to make some extra contribution room inside of my TFSA. And then, it'll pump up. It's not something I plan to keep. And then I'll just sell it off and I'll put it into the stocks that I do plan to keep. Just keep in mind that when you do play inside your TFSA, anything you sell, don't buy it back for, at least 30 days. And I always say go at least 31 to make sure that there's no issue there, because the CRA will look at you, and as soon as they see anything that even remotely looks like day trading, they can get pretty cranky with you, and there can be some ramifications if you're doing a lot of stuff that you're not supposed to be doing in your TFSA. And when I say it's not like they're going to send you to jail or anything, but what they can do is they can all of a sudden start hitting you with some pretty serious taxes and things like that. Because they're like, okay, you're not supposed to be treating that like a business. You're treating it like a business. It doesn't gain, we're taking away the tax-free status on these transactions. That would be more or less what I would expect them to do. But you really don't want to do that. If you're going to be doing any kind of serious trading, you want to be doing that outside of your registered accounts. So just keep that in mind. All right. So it is now, so you guys got me on a tangent. You got me 8 minutes a little bit later. That's kind of cool. So I think that's mostly it. Driving update, I'll give you that before I go as well. So my driving instructor quit, which was, fun, I guess. But now they've given me a new driving instructor. So I still got two lessons, 2 4-hour classes, in the car left. So those are going to be, the end of November. So I think it's the 28th, and then I think the 5th of December. So I might get to drive in some snow. So that could be kind of fun. And I think that's about it. The holidays is coming up. I just want to talk a tiny bit about that before I go. I'm almost tangenting myself now. With the holidays. Last year, what I did is I did 5 videos in 5 days. I don't have time to do 5 videos in 5 days this year, but I do want to do something special, and I don't know what yet. So I'm still kind of coming up and brainstorming that. If any of you guys have ideas, you're more than welcome to throw them at me over there on the Facebook page, or or if you're just one of these people, because there are people out here, and I know there's people in the community who are like, yeah, I don't do Facebook. Throw it on a comment on a video. That would be kind of cool, because I don't know yet what I'm doing, but I want to do something. I want to do something for you guys. Last year, like I said, I did five videos in 5 days, and I also did a Christmas Day live stream. So maybe I'll do another Christmas. 12 videos of December. Well, it's kind of cool. Yeah, I want to do something special, but I don't know. And this is kind of one of the things. The Christmas video I did last year, I did one video that was technically a Christmas video. Now it did dismal, but it was more or less. It's one of these things. Whenever I do a video on how to save money, people aren't as interested in it. But now keep in mind, now that we're heading into a recession, people might be more interested in something like that. And that was also before I got the new camera too. So my laptop camera, that Christmas video, I hate that Christmas video, to be honest, because it's so friggin' blurry. I find it blurry, a little bit blurry. I mean, it was nice because I was using the green screen and I had some snow falling, well, kind of cartoony snow. But I think it turned a little bit on the blurry side. So, if you're going through my old videos and you're thinking, do I really want to watch that video? It's probably a no, because it's not good. It's really not good. I'm just putting that out there right now. You can go check it out if you really want to, but it's not good. So have no expectations for it. Or if you're a drinker, you might want to have a few before you watch that video, and then it might be perfectly fine. That's just kind of a cool, interesting thing. Deep dive on coal stocks. I do like that idea. I am looking to do some more stocks, not more stocks, but some more videos on our resource sector, because that is going to be a big booming sector. Like right now, copper is doing pretty darn well. So that is something I want to get into, Scott. I think that's a great idea. But yeah, so for the Christmas, I'm going to think about that, and we'll figure something out. We got till December, because whatever it is, I want to do it in December. I might just do another Christmas Day live stream. Now, because I have to go out to Jill's family and everything for Christmas, in the afternoon, if I do a live stream, it'll be like a morning one, because that's what it was last year. It was like I did a morning live stream on Christmas. It was like 9 a.m. Eastern or something, or 10 a.m. Eastern. It was really early. We went for about an hour and a half. But then, that's the thing. It's like, you know what? It's Christmas. Open your gifts in the morning. Don't watch the live stream. But then later in the day, when you're bored waiting for the turkey to cook or whatever, watch the live stream then. And amazingly, a lot of people took that advice, because that live stream, I had people in the summer still watching that live stream, and I'm like, what's going on? But I think it's because I had a news story, but in regards to canoe, that was attached to that live stream, and that is why it went. And Candace, what happened with Japan for 30 years? Oh, look at this. You sneak in at like 13 minutes after and ask the Japan question. I know. You know what, Vic, what I'm going to do here is, it's a little late to get into that Japan question. I still do want to. Yeah, absolutely. Alwyn, we did actually, friggin' Oracle joined me, and we did it wasn't a prediction, but we did sort of a 2021 in review. But I wouldn't mind doing a prediction. That's a really good suggestion. I like that idea. I might have to bring the Oracle for that one, just because he's a prediction person, right? That'll be interesting to see. Yeah, that would be a really good thing to do. Vic, I love that Japan idea. So you know what I'm going to do? I'm going to make a video on Japan. I just kind of want to. So yeah, just give me a little bit of time to figure out what I want to do with Japan, because I think it's not just a simple question about their economy. I think there's a lot of lessons in what's happened with Japan's economy. Yeah, it was one of these things I was looking for you. Easier question. Oh, just quick. Hi, Jill. Easier question. Where's Rye? That is not the easiest question in the world, my friend. All right. Basically, I'll give you everything I know. He was in Calgary, and I know that his family needed some help with the family business. I think in particular his dad needed help. So he left Calgary and came back to Ottawa. So he's currently in Ottawa, helping out his family business. That is keeping him absolutely busy. So I know he's getting the odd video out. I think he's had a couple out in the last month or so. And the odd post out just to sort of let you guys know what's up. But that's all I know. So outside of that, I don't know. I know about as much as you do, Vic. After me telling you what I know, we now know the exact same about what's going on with Rye. But the beautiful thing is this channel is going to be staying nice and busy. I've got nothing planned unless I get hit by a bus or something. Then we're all good, and we're going to keep on trucking along and keep on pumping out those videos. 2 or 3 a week, depending on whether it's one of those Saturdays where I don't do one. Yeah, we're going to keep it going. We're going to keep on building. I'm really excited about it. And I'm also excited once a few more of you guys start moving into the member channel as well. I got a lot of great stuff behind the scenes stuff too that I want to do there. I'm also really excited about where YouTube overall has been going and heading. And I think there's going to be a lot of opportunity to really enhance the channel as we go. So yeah, I'm just very excited about all of this. And all right, this will be my last question of the day. So let me get this right. Make nonsense crypto token, create lots of them, eliminate a bunch, leverage hard cash against crap token, then cash out, declare bankruptcy, and be an instant millionaire. Yeah, that actually does happen. There's a lot of rug pulls out there, and there's also just a lot of bad business models when it comes to those exchanges. I think we covered the exchange a little bit earlier today, Vic, big amount on that exchange. But yeah, sometimes that does happen. And sometimes there are people, though, who do come in. We're not talking about the exchanges so much, but there are people who will actually come in and create a coin. And they've got no intention of actually going anywhere. They're just hyping it up, getting people to buy into it. And then, they're doing that traditional rug pull. It does happen in crypto, unfortunately. And that's why, and I know the whole idea of decentralization goes against regulation, but we kind of need that regulation. There needs to be protection for people to feel safe to invest in crypto. And I think that's going to come. I know I watched a video, Kevin O'Leary was on a news interview, and he's heading to Washington. He says he's going to start he's going to start shaking the tree in Washington, the regulation tree, because these type of things, when you got a lot of people losing money like this with no protection, it's not right. And I think it will be one of these situations where, decentralization it's a great concept, and we can still maintain decentralization, but we can do it with some kind of regulation and framework to protect people's investments. And that's kind of where that all boils down to. And, anybody who's pulling off this kind of stuff, Vic, they've got no respect for me, none whatsoever. And hopefully the whole process of bankruptcy, if he's got anything stashed away, I hope they find it. I hope they take it from him and they give it back to some of the people who invested in crypto within FTX and, anybody else who follows suit. All right, everybody. Holy banana bread. We went an extra 20 minutes, all based on tangents, but that's the way it rolls. So bring those questions next week if you want to push things a little a little bit further. And yes, they may actually get coal from Mr. Claus himself. All right, everybody. It's been a fantastic afternoon. I'm so glad that you guys are all here today. We'll be back again here. We'll do this again next week. And we'll start moving towards the holidays, and we'll try to see what other kind of fun stuff we can pull in. And you never know. We may actually, I may be looking to bring a couple of people on board, just, a couple of guests, just as we get into the holiday season. They don't know it yet. I have to talk to them first, but I think it would be kind of cool, and I'm looking forward to the next month and a half. It's going to be a fun ride. Anyway, everybody, you guys all have a fantastic afternoon, and we'll see you guys again next week. Take care, everybody.